Friday, May 24th, Memorial Day weekend, coming early this year. Around here it feels really early. We had 8 inches of snow at my house on Wednesday. This has been an extraordinary week in the markets, and peculiar, very, very peculiar. We got Fed minutes on Wednesday. On Thursday, markets all over the world simply fell apart. Stock markets fell apart, bond markets, when there's bad news or other markets falling apart, money goes into bonds and pushes interest rates down. And so we're always trying to cause and effect, please. It drives my family crazy, of course, but I have to look at Bloomberg before I go to bed to figure out how Asia's doing first thing in the morning. Late Wednesday evening, U.S. time, this little tidbit came out of Asia that Japan's purchasing managers survey had rolled off the edge of the table, and the Japanese economy is likely shrinking again. But that's kind of old news. But markets started to fall apart right then, and as soon as New York markets opened, and even though we're in a 24/7 global world, market trading is still New York Central. And as the day wore on, the Dow Jones was off 400 at one point, which is not necessarily a big deal. It does things like that periodically. But the big action was in bonds. The 10-year T-note broke through the panicked low at the end of March of this year, and the lowest that it's been since the fall of 2017. The German 10-year, which is a marker of European tensions and maybe global tensions, fell to its lowest level, negative, since 2016, all on Thursday. Mortgage rates didn't move much. What made it big news is this technical business of breaking through old lows and the potential to go lower. Also, the Fed's bellwether is the 2-year Treasury note, and it fell to a level that's an outright prediction that the Fed's going to cut its interest rate fairly soon. Meanwhile, on Wednesday, the Fed issued the minutes of its meeting on May 1. The minutes said that the Fed is patient. Translation, the Fed doesn't have any idea what to do. The inflation is lower than it's supposed to be. The economy is still strong. The unemployment rate is low. The Fed's theoretical and practical limits are all busted. And the Fed's standing still principally on the good old medical theory of first, do no harm. But they don't look very bright. I mean, if you release minutes on a Wednesday saying that you're doing nothing, and the next day markets all over the world fall apart, it makes you think maybe you ought to ease after all. So maybe that's in the wings and maybe it's not. And everybody gets a little loopy in the springtime, and we all need a certain amount of entertainment in markets because we're always taking things too seriously. But Mr. Trump's moment of irritation on Wednesday followed on Thursday by, captured on film. A perfectly stable genius, I am. Markets are used to the idea that he's a little off. Markets are used to being yanked around by tweet, to which they have to respond and then discover a few hours or a day later that it didn't really mean anything. And it was interesting to watch the market reaction. On Thursday, that line, I looked up this morning, when was the first moving picture visual of an American president? And Wiki says that the first newsreels for old people, you'd go to a movie theater and before the movie started, there would be a newsreel of news around the world. The first newsreel dates to 1909. And so I played the tape in my own head of when was there a moment for an American president since 1909 comparable to, I'm a perfectly stable genius, okay? And I'm stumped. But I've got a whole weekend to think about it. Maybe I'll come up with something. Have a great Memorial Day.